It's decision day for the Bank of England. Welcome to Market Insight. I'm Ramzan Karamali. The UK Central Bank is fully expected to keep interest rates on hold at 5.25%. However, investors will be looking for signals of when easing might start. So forecasts for inflation and growth will come under particular scrutiny. Well, to help us look ahead to that decision and more, I'm joined by Aoifinn Devitt, Chief Investment Officer at London CIV. Aoifinn, thanks so much for joining us. Well, the market seemed to think the Bank of England will begin cutting rates in August. But what will they need to hear today to confirm that belief?
I think they're going to look for something quite similar that came out of the Fed, that the bank is data dependent. They're going to look for some encouraging signs, at least around inflation heading in the right direction. They're also going to want to see, I think, some indicators that the economy is strong enough that they can do this, but equally that they want to see the positive indicators coming there, because so much rests on every word now. And particularly the Bank of England needs to salvage and restore all the credibility that it can.
Now, how much influence do you think their decision will be on what the Fed and the ECB will have to do as well?
Yeah, I think clearly the Fed is leading the pack here. It doesn't take signals from other central banks. I think the ECB looks like it probably will be first or one of the first to move, because clearly inflation is low here. We don't have that strong underpinning in Europe of economic growth. Similarly, in the UK, despite the fact that the stock market has really come out of its own in the last few weeks, but a weaker sterling there's still not a whole amount to think that that is going to be the resilience that we've seen in the US. And so I would suggest that the Fed is definitely pushed into the fourth quarter, if not later, but that the ECB will be and the Bank of England are likely to be first. And I'd say August is a good bet for that.
Well, in recent days, the Fed seems to have eased sort of rate hike fears, but that speculation has had quite a big impact on currency markets in particular. What do you make of what's going on in the currency markets at the moment?
It's really interesting. The dollar at this all-time high, of course, great for the US, but going to continue to put pressure on trading partners, particularly those in emerging markets. It does seem that even staying high, though, we have to remember that is in itself a form of tightening. When we have inflation coming down, those real rates start to pinch, and we're having the sustained period of high rates, which will start to affect the consumers and the corporates who didn't have to refinance perhaps at the beginning, but now after this elongated period are going to have to do something. So I do think it's a period of tightening. They're doing that on the balance sheet, even if they're staying high. So just saying they're not going to hike is really not the reassurance perhaps that investors thought they were going to get. As far as currencies, we've seen it being reflected, of course, in the British pound weakening again. And the one thing I would say is concerning is this prolonged weakness of the yen. That's going to put some pressure on China, given the relatively similar areas that those exporters circulated.
Now, the big corporate story today is BBVA is announcing its hostile $13 billion takeover offer for rival Sabadell. What do you make of its latest move?
Well, I'd say financials in general have been sitting on relatively high amounts of cash. They need to do something. They need to generate growth. They probably did actually get a bit of a pass from the recent activity, the trading activity that we're seeing. We saw that in the US financial markets. Fixed income trading in particular has been strong. I'd say this smacks of a need to find growth wherever they can, and equally to use up some of that cash in an environment where they know that the next move down in Europe is rates, and they need to ultimately target those areas of growth, such as in Latin America. It is unusual, as you said, a hostile takeover in the world of finance, but this is, I think, the new world we're looking at. There's increasing desperation on the part of financial institutions to show growth.
And finally, British broadcaster ITV reckons it will see a 12% jump in advertising in Q2. That's thanks to the Euros. Do you think the football will provide the firm as much of a boost as it thinks?
Well, certainly we're seeing such a renewed interest in watching sport as we've got the celebrity involvement, etc. That doesn't seem to be in any way diminishing. But what I would say is that it's a pretty optimistic claim that shows that perhaps the sport is not shifting onto streaming platforms and is not going to be internet where corporates spend their capex. We do see that there's a lot of capex coming on the hardware side of things, certainly with AI and chips. I didn't think there was that much lying around to spend on TV advertising, but taking a leaf out of the Super Bowl scenario in the US, which clearly has reached kind of height proportions, maybe something similar. That level of growth, though, I was surprised by that.
Aoifinn Devitt, Chief Investment Officer at London CIV, many thanks for your thoughts. And that's Market Insight. Don't forget you can watch more videos on Reuters.com.